Good afternoon, everyone. And welcome to the Monday Market Open hosted by the Vantage Private Client team. My name is Steve, and joining me for today is a special guest. We've got John, who's actually appearing on his first Monday session for the first time. John is actually one of our relationship managers who regularly presents our midweek market updates. So if you haven't seen our midweek market updates, feel free to reach out to your relationship manager and we can, definitely, send that across with the links. But how are you going, John?
Yeah, good man. Crazy end to the week last week on markets, and it's been interesting to watch how they open up this day.
Yeah, definitely fair point. And that brings us into for anyone joining us for the first time. Today's session, we're basically going to begin with a review of market events from last week. Obviously, there's a lot to talk about. We'll also discuss some of the key themes that influence price movements around global markets. After that, we'll shift into the week ahead, where we'll highlight several upcoming economic events and developments that traders might be watching over the coming week. John will also be taking us through the technical corner, where we'll look at a couple of key markets using technical indicators and chart analysis, more like a top-down approach. And finally, we'll be finishing with a session by answering some of the most common questions received from viewers over the past week. But before we begin, I just want to quickly remind that the information discussed in this session is general in nature and provided for educational and informational purposes only. So it does not account your personal objectives, financial situation or needs, and any market commentary, views, or examples discussed not intended as financial advice, and past performance or historical price movements are not reliable indicators of future result. With that being said, let's start by looking at the most actively traded markets from last week. So just looking at the slide. So John, did you see any sort of changes when it comes to any sort of surprises when it comes to the markets?
Not in particular, mate.
Yeah, no, that's what we'll do is we'll quickly deep dive into last week. So basically with last week, we had a very heavy week. So we had the Australian GDP data, which was higher than expected. So also we had quite a few sort of China sort of data. So we had the PMIs as well as the rating dog PMIs. So the PMIs is basically the sort of bigger companies. With the Chinese rating dog, it's more the sort of smaller companies. And we also had the Eurozone CPI, so the inflation. But a lot of it came down to a lot of mixed US data. So we saw the ISM PMIs stronger to show a bit of a strength in the economy. But then it also came down with the sort of retail sales, as well as a bit of a shock, especially with the unemployment rate and also the non-farm employment change, which was minus 92K compared to 58K rounding out the week. What did you think of that, John? Bit of a
Yeah,
surprise?
massive miss in the data. It's really showing the jobs market's not really doing well. It's been weak for some time, and it's definitely signs now that things are getting worse. The data from Friday shows that the deteriorating labor market,
Yeah,
92,000 jobs lost, and there was also revisions down to 126,000 jobs for January, and December
yeah.
got revised down to 17,000. So these
Yeah,
higher
obviously
adding to
with
it.
the jobs, I mean, looking at the Fed, basically they've got a dual mandate. So to give you context, as for the Fed, they're basically trying to control inflation, keeping the sort of inflation down while also maintaining a stable employment rate. So essentially, it's basically a dual mandate that the Fed, Jerome Powell, has basically come out and said. There has been the word stagflation come up a few times recently. I've seen a few headlines with that. But there's I'll go on to what we did is we also saw actually the White House formally nominating Kevin Walsh when it comes to basically the next Fed chair. So as we've mentioned previously, Jerome Powell, Fed Jerome Powell is actually going to be leaving the position May 2026. So only a couple months away, and then basically that's going to be Kevin Walsh. What that did to actual markets was that was all pro crypto. So we've mentioned previously, he is very pretty much pro crypto. There's been a few sort of circulations when it comes to videos about how he believes crypto does have a real real sort of space in the future. So very interesting to see with that. We also saw Michelle Bullock saying that the March rate hike is actually now live. So she's actually come on record. Originally, we were looking at potentially a May hike because there's no April meeting when it comes to the RBA, which would impact the Aussie dollar. But Michelle Bullock, based on what we're going to be leading into, probably the biggest name and biggest event that's happened throughout last week and continuing. So we saw all gains, go up to 23% week on week, over that sort of 20% to actually reach a 14-month high. And that was in regards to the US um, Iran war escalation. So obviously last week we spoke about it in depth in regards to breaking news, and we've now seen this kind of trickle over, especially with oil prices. So what that means is that we've seen a large amount of sort of volatility last week, especially in all markets, including commodities. So we'll go on to this week, and also it's a good segue when it comes to discussing this from not only last week, but also this week. So right now, as it stands, what has recently happened is basically so the US combined with Israel, they've basically gone into Iran. They've killed one of basically the supreme leader. Today, they actually announced that the son is actually going to pick up the regime um, when it comes to Iran. And there's a lot of what's actually happened is that Iran's also been actually attacking sort of US bases. So they've basically looked at attacking US bases that are surrounding Iran, so like the Middle East, as well as other countries where basically there's some US bases. So what this has actually impacted is really oil prices. So there are concerns in regards to the oil supply. What we discussed last week was that when it comes to the OPEC nation, Iran is one of those nations where it's got 2% of the world's oil, as well as they've got the Hormuz Strait, which picks up the 20% of oil. So a lot of things happening. But with this week, we've also got daylight savings time. So we've basically shifted when it comes to the market open hours. A lot of traders, especially today, would have seen that instead of the normal time, we basically saw 1 hour with the change of clocks. What did you reckon of the hour switch, John?
Makes things a bit early for us now, doesn't it? So the US
Yeah,
session is now going to be an hour earlier.
yeah,
The
which is
Australian traders will be happy with that.
yeah, especially Australian traders. Instead of 1:30 a.m., you only have to be up at 12:30 a.m. In order to meet the open. But also the economic news will come out earlier, so there is a bit of adjustment time, especially with the US and Canada. We've actually seen also the China CPI and PPI numbers, so inflation come out. That's just been released this morning,
Mm.
which is higher than expected. So good to see the second largest economy having that sort of data. We are fairly light when it comes to data this week on a global front, other than the US and obviously ongoing situation between the US and Iran. So we've got locally within Australia, we do have the NAB Business Confidence survey, as well as Westpac consumer sentiment. So this gives us an indication locally at home. It's generally not the biggest sort of impactor to the Aussie, but it might give some sort of clues, especially with the RBA meeting coming up a little bit later. I believe it's around the 17th or 18th of March, and everyone's obviously looking at the interest rate, whether it could be a hold or potential hike. There is, the easing cycle has already been ruled out. We're looking at also from the UK, so looking at the sort of GDP. So we'll look at that sort of data, but a lot of US data, especially again inflation, GDP, as well as around the sort of jobless claims. We've also got the JOLTS opening, so it'll give us a good indication of the US, because last week we've seen it's a bit mixed. But yeah, a lot to digest. John, any sort of commentary that you had for maybe this week?
Yeah, this week I think a lot of focus will be on the Iran situation. That Strait of Hormuz, it's being said it's not entirely closed, but yeah, just closed for U.S. and Israel-related ships. But with insurers refusing to cover ships going through the strait, and no clarity on Trump's idea of a U.S. government insurance as an alternative, the traffic has come to a virtual standstill. So, it begs the question of how long the closure will last, as 20% of the world's daily oil flow passes through that region. So, it's a pretty big
Yeah,
situation over there. And just looking at oil this week, we've already seen like prices
I
up
mean that.
27% just today. So it's
Yeah,
highest level
no,
since June 2022. So yeah, this week will be yeah. Other than the major news events, we'll have to keep an eye out for any more announcements on that
yeah,
situation.
no. Definitely. With I was speaking to a few clients, and from last week, I think it was $1.66, and it's already up to $2.15. But perfect segue to look at the technicals. So John, just the technicals.
Yeah, give me 1 second. Let me just share the screen. So for this week, I thought it'd be good to have a look at gold, which we did see prices pull back a fair bit, down 2% last week. This week we've opened up pretty much straight down. So just looking at the weekly chart here, so we've got precious metals had a pretty weak week last week. Silver was down close to 10%, so gold down, down 2%. It's hard to say if the overall higher time frame trend is changing, as we're still very bullish from a technical perspective, and price would have to have another significant drop below the January lows, just below 5,000 for the technical. Oh, sorry, we'd have to break below really 4,500 for this price action to change from a technical standpoint. If we look at the daily chart here, we can see that after some consolidation over the past few days, prices have opened up the week down. And it's similar to the move we're seeing across global equity markets, currencies, and crypto. From a technical standpoint, if price was to break below last week's lows, we might see push back down to retest 4,900 if we don't find some support around the 5,000 key level. Looking down at the 4 hour here, we can see that, we made some resistance at 5,200 last week. We'd have to, to be able to confidently say that buys are looking attractive again. I think you'd want to see support formed above last week's highs, so above 5,200. And if we break last week's lows at around 5,000, we may see a push back down towards the 4,900 key level. In times like this, it's important to remember to still exercise proper risk management. As you know, although the fundamentals at the moment support gold upside with geopolitical tensions and potential increases in inflation due to the spike in oil prices, we have seen price action that contradicts this. Just like we saw last week with prices pulling back lower, and Tuesday and Friday last week, as well as this morning, we've seen some drop offs in gold. Just looking now at the Aussie dollar, as Steve mentions, we've got some pretty key data coming out for the Aussie dollar, especially with last week's GDP as well. Just looking on the weekly chart here, we can see we did consolidate for 1, 2, 3, 4, 5, about 6 weeks now. After breaking above the 2024 highs, we have seen some consolidation. The chart's still bullish, just like gold on the higher time frame. And last week we did see a close above 70 cents, right at that support zone that's been holding for a couple of weeks now. But today we've opened the week back below 70 cents. So the Aussie dollar closed last week flat, which could be due to currency typically underperforming during risk-off events. However, we also saw similar moves in the euro, yen, the pound. They all saw losses against the outperforming US dollar last week. So despite the upside in the USD, with the DXY being back to 2025 highs, the Aussie dollar has only dropped off relatively a minor amount compared to some of the other currencies. And we can still see prices still hovering just below that broken resistance, and we need to see a significant break and hold below 69 cents for the chart to shift from a technical standpoint. If we look at the daily chart here, we can see that breaking back below the previous daily support from Thursday last week. On Friday, we opened below it. We tried to break above, couldn't hold, and today we've opened up below 70 cents, gapping lower. Looking like prices are going to retest their previous support just above 69 cents. And for confirmations for the Aussie dollar, I think we're still in this high time frame range between 71 cents and 69. For buying opportunities, we've got not much room to target back into previous daily support. So if we see confirmations of solid support above 69 cents, you have a bit more room to target up at that broken resistance. And for sales, I think you're fighting an upwards trend here, and you'd have to look for something around 71 cents, showing some solid resistance before looking for sales. You can just see on the 4-hour time frame here that broken support area. The gap lower to start the week has made the price action a bit messy. So for more clarity, I'd like to see some solid confirmation of support around 69 cents. For example, daily bullish candle closes, and be cautious looking for sells around these levels.
No, thank you, John. Good sort of snapshot as to what we're really looking at. Obviously, what John mentioned, within this sort of volatility, it's more about that sort of risk management. But let's go into the questions. So question one is really around, just next slide. So question one is, how can daylight savings times shift impact traders? So it is a really good question. I know that personally, what we've alluded to is that when it comes to Australian traders, especially if you're located maybe more in Sydney and Melbourne, that means that the US session, which is usually at 1:30 a.m., now becomes 12:30 a.m. And a lot of the key announcements, the sort of data, will also be 1 hour before that. So it really does help. I know that with Western Australian traders, it probably doesn't impact. But it's also about adapting when it comes to that. So you might be used to it. So it does take weeks to sort of adjust. So just bear in mind and just ensure that, when, the difference of time. So whether it's Sydney, Tokyo, the London or US session. But question two, John.
Yeah, I thought I'd just touch on NFP, given that we had it on Friday. I'm sure you guys have touched on it previously, but for any of our newer viewers here, why is non-farm payrolls, or NFP, so important for traders? So NFP is one of the most closely watched economic data releases because it provides a clear snapshot of the health of the US labor market. So since employment drives consumer spending, inflation, and overall economic growth, it is one of the key pieces of data that the Fed, as well as traders, are looking at or for the Fed to guide their policy decisions and for traders to anticipate future rate paths. So because the data frequently surprises markets, as it did on Friday last week, relative to expectations, releases can trigger large price swings within minutes, often impacting assets like gold, US equity markets, and US treasuries, as well as currencies across the board.
Nice, thank you, John. And just to wrap up, obviously, if you do want to find out any more information from us, feel free to basically check us out on our socials. We've got the YouTube channel, we've got a Telegram group. If you are unaware of these, feel free to reach out to your relationship manager. We can provide all the links and more details. But if there's any questions that you do have, always feel free to reach out to us. We're happy to help. But yeah, thank you, John, for assisting, and enjoy your evening, everyone.
Thanks for having me. See you guys.